Hey everybody, Smart Silver Stacker here. Let's talk about gold and silver and what's going on in the precious metals market today. Silver at the lows of the day down almost 2%, touching down to that $23 level. And at the time I'm recording this, there's been a little bit of a bounce. Gold and silver both down just about 1.5%, so pretty good sell-off in the metals today. Crude oil also down 3%, so it's not just gold and silver. All commodities seem to be under some pressure. And this was on news that the Institute for Supply Management, their non-manufacturing services PMI, had a significantly higher print than what was expected, came out at 66.7% against a forecast of 62% and against last month's number of 61.9%. And this is being interpreted as a sign of growth on the service side of the economy, a sign of recovery. But one thing I don't see the financial media covering as in-depth is the price index that the ISM came out with, which is up to 82.9%, which is the second highest that number's ever printed, and that's up from 77.5% last month. So this high price index print is an indication that inflation is alive and well. That's a huge increase in prices month over month. Today, markets are also bracing for the FOMC, the press conference following the FOMC meeting, where Jerome Powell is widely expected to announce the beginning of a taper. He more or less has been indicating in previous meetings that this November meeting would be the time that we would see the taper announced. The conditional language in previous meetings was that the jobs picture would need to see continued improvement and that the recovery would need to remain strong in order for us to see a taper. But it seems likely at this point that we will see some kind of a taper announcement. And, it may rile markets a little bit if we see the Fed begin to taper asset purchases, although I suspect that that is already more or less priced in, as it's no secret that the Fed is going to be looking to taper at the end of 2021. Now, I do expect that we'll probably see a taper on some kind of an extended timeline. I don't think the Fed's going to be in any hurry to completely draw down asset purchases, but only time will tell. And if there is no taper announced today, if the Fed attempts to kick the can down the road further, I suspect that risk assets, Bitcoin and stocks are going to take off. How gold and silver will react is anybody's guess. I mean, in this weird backwards world that we see, if they come out with no taper and they start printing more money, people may see this as a sign that the economy is going to do well. I suppose they're not entirely wrong, because at this point it really is just the accommodative monetary policy of the Fed that is keeping everything moving. There's certainly no fundamental case for a recovery. All of the elevated asset prices that we are seeing are directly linked to monetary expansion and money creation, well, rather currency creation, I guess I should say, by the Fed. Now, regardless of what they announce at the FOMC, taper or no taper, the pullback that we're seeing in the price of silver today, I really view that as a buying opportunity. I think that the fundamental case for stacking silver and getting your hands on some tangible assets remains incredibly strong. One of the reasons that I see inflation marching significantly higher, and one of the reasons I think precious metals are going to do very well in the years to come, is that President Biden's tax plan doesn't seem to be gaining any ground. The left's plan to tax the unrealized capital gains on billionaires' assets, it looks like that's dead in the water. And they're just having a hard time raising taxes, it seems like. Now, this is not unusual. Of course, politicians always want to spend money because that is very popular among their constituents, but they never want to tax. They always want to pretend that all of this spending can come for free, that there's no cost to any of this, and that no one needs to pay the taxes. I suspect that that's why they're having a hard time raising taxes and coming up with sources of revenue for all of this spending that they're proposing, because of course nobody is talking about scrapping any of their government programs, the trillions of dollars they want to spend on infrastructure. And if they can't tax and spend, they will just print and spend. And of course, that means that we'll all be paying for all of this spending through the much more insidious tax of inflation. And that's why I think that this is a good opportunity, this pullback that we're seeing in the precious metals. It's an opportunity to get out of the dollar, get into real assets. And I think that the dollar's fate at this point is pretty much sealed, regardless of what the Fed does. So we should all be counting our lucky stars every time that we get a pullback like this one and we have the opportunity to swap out some devaluing fiat for real money at a discount price. Of course, not everybody thinks that precious metals are the best inflation hedge these days. I keep seeing lots of headlines out there about how Bitcoin and cryptocurrencies are the new best inflation hedge. JP Morgan even ranked Bitcoin as a better inflation hedge than gold. And I don't know, I just don't really see it. It's hard for me to see how a digital currency like Bitcoin can be a better inflation hedge than a real tangible asset like silver and other precious metals. Even just based on their price behavior, it seems to me like Bitcoin is trading much more like a risk asset than an inflation hedge. It moves along pretty much at the same pace and at the same times as risk assets like tech stocks. We're seeing a huge bubble being inflated in these risk assets. And Bitcoin just seems like it's in bubble territory to me. I mean, it's had this massive move up, and I'm not saying it couldn't move higher. Of course, you never can tell when a bubble is going to top out. So, Bitcoin could double from here. Who knows? It could go much higher. But I do think that there's going to come a time when the bubble finds a pin. And I just wanted to ask you guys, what do you think is the better inflation hedge? Do you think it's precious metals, or do you think that it is Bitcoin? I'd like you to let me know in the comments below. But also, I have a couple questions I want to ask you guys on that topic. So these are kind of hypothetical, but feel free to let me know what you think as far as any of these questions go in the comments. But, if the internet goes down, if for some reason we lose internet accessibility, we had that Facebook outage not too long ago that lasted for a day. Everybody made a big deal of it. But I think it's important to note that, the internet is something we can't take for granted. Clearly, it does have its vulnerabilities. And, whether it be because of a bad software update, like we saw in the case of Facebook, or if it's something more malicious, like a cyber attack, the internet's definitely vulnerable. And if the internet goes out, which would you rather have? Would you rather have real, physical, tangible silver bullion like this coin here? Or would you like to have a Bitcoin wallet, or maybe some cold storage that's difficult to access without internet access, or a piece of paper with a passphrase written down on it? I think that the answer to that, at least in my case, is going to be silver. Silver is what I would rather have. As far as competition goes, silver, yeah, there are some other precious metals. I've heard that argument raised that you could just have some other metal. There's gold, there's copper, there's palladium, there's platinum, and it is true, it's not like silver's the only precious metal out there. There are several metals that you could hold as an inflation hedge, but that's compared to Bitcoin and cryptocurrency. Last time I checked, there are over 13,000 cryptocurrencies as of today, as of 2021, and that number is steadily growing. So the idea, I know people say, you can't create Bitcoin and there's a limited number of it, 21 million Bitcoins. That's the only, Bitcoin that's ever going to be out there. But there are these other 13,000 cryptos, and you can create those. So it's not like you can't create competitors to Bitcoin. And also, the argument that Bitcoin is a limited asset, it is true. There's 21 million Bitcoins out there, but it seems kind of arbitrary to say there's 21 million Bitcoins, because the smallest unit of Bitcoin is the Satoshi. You can divide the Bitcoin, I think, down to 8 decimal places, and that's how you get the finest, the smallest, most divisible unit of Bitcoin, the Satoshi. And there's actually 2.1 quadrillion Satoshis out there. So although I know that it's still a finite number, it's not like it's a small number. And also, there are all these competing cryptocurrencies being created all the time. So which would you rather have? Would you rather have an asset like silver that you have to dig up out of the ground? Or would you rather have a cryptocurrency which, I know that individual cryptos are limited, but you can kind of endlessly create them. There's no hard rule on how many cryptocurrencies you can have out there in the universe. Another thing I want to ask you, if there are runs on banks or financial instability, which would you rather have? A physical, tangible asset you can hold in your hand, or a cryptocurrency? Now, the answer to this one I don't think is quite as cut and dry, because if there's runs on banks, you're probably still better off having Bitcoin or cryptocurrencies than you are having deposits in fiat currency in the bank, obviously. So I think there can be a case to be made in the event of a run on the bank. Bitcoin would be a good thing to have. But personally, I would rather have a tangible asset that I can hold in my hand and in my own possession with no counterparty risk. So I'm going to pick silver in that case as well. One other thing, if there's no electricity, which asset would you rather have, Bitcoin or physical tangible metal like this silver coin? Because, one of the things that kind of goes along with hyperinflation is a loss of services. Look at Venezuela or Zimbabwe. Power, water, medical care, all that stuff is spotty at best. And if you don't have power, it seems like cryptocurrencies lose a lot of their appeal. I mean, maybe there's some offline way to transfer cryptocurrency to one another. I know that you could have like a, paper wallet and that sort of thing, but it really makes using cryptocurrency a lot more difficult if you're operating in an environment without power. And I've seen all these headlines about how people in Venezuela are using cryptocurrency as a alternative to the bolivar, the fiat currency down there, which is worthless and has been ravaged by hyperinflation. But I want to tell you, I have some relatives who live in Venezuela currently, and several more who were there during the hyperinflation and have since gotten out. And I've asked quite a few of them what the situation is like there, what, alternative currencies they're resorting to. And although a few of them were kind of aware of Bitcoin and cryptocurrency and maybe had some idea of it, not a single one of them had ever used it. And these aren't all older people. I mean, some of them are older, but some of them are younger than me. And while they knew about Bitcoin, they knew what it was, they just kind of laughed when I asked if anybody was using that. And then they just all use paper US dollars for the most part down there. In the event that they are resorting to some kind of alternative currency, it's typically precious metals. Now, nobody is bartering with precious metals down there as far as I could glean, but a lot of people have sold jewelry and coins and stuff like that for US dollars, which they then use in the black market. And I saw a headline the other day about how in a remote area in Venezuela where they actually have gold deposits, people are digging up gold nuggets and they're cutting them into fragments and using that as a local currency. So they've even got this kind of rogue hard money currency that's developing. And this isn't people who stacked metal. This is people who are going and digging it out of the ground just so they have some kind of a unit of exchange that isn't paper. Time has shown us that when currencies devalue, gold and silver are sort of the default. So I think that gold and silver are going to continue doing their job as an alternative to worthless fiat paper. And we'll have to see what happens with Bitcoin, because honestly, as far as an inflation hedge, every hyperinflation that's ever happened throughout history, all the way back to, Greek and Roman times, gold and silver have done their job of holding value and acting as a store of value, while fiat currencies and debased metal coinage lose value rapidly. So gold and silver have a really good track record of preserving wealth. And I would challenge anybody out there who's a Bitcoin enthusiast who thinks Bitcoin is a better inflation hedge than gold or silver. I would challenge them to point out a time historically when gold and silver have failed to preserve value through a hyperinflation. Whereas, Bitcoin and cryptocurrencies, they're new assets. They've never really been tested by a severe financial crisis or a severe hyperinflation. So we just don't know how they're going to react. And I'm not saying that holding Bitcoin or crypto is a bad thing. I'm just saying that I view it as much more of a speculative, risky investment and much less of a store of value or a inflation hedge than gold and silver. So to say that gold and silver are antiquated and no longer will fulfill their role as an inflation hedge and Bitcoin is the new inflation hedge, I think it's all just a bunch of hype. I think it's all playing into the speculative mania. And speaking of speculative manias, if you go to coinmarketcap.com, it's a website that ranks all of the cryptocurrencies by their market capitalizations, by their total value. And if you look at the number 9 and 10 slots, it's a Shiba Inu coin and Dogecoin respectively. So if you've got a situation where you've got these 13,000 cryptocurrencies out there and the top spot is Bitcoin, okay, maybe you can make a case for Bitcoin, but the number 9 and the number 10 slot are meme coins, which were created as a joke based on a meme dog. If those are in the number 9 and 10 slots as far as cryptocurrencies go, what does that say? I mean, I think it's obvious that this is some kind of a speculative mania that we can expect to come to some kind of a messy end in the future. I just don't buy it that cryptocurrency is the new inflation hedge. I really think it's a speculative asset and it's in a bubble, and there's plenty of warning signs as to that. And the fact that the mainstream media keeps pumping Bitcoin. I mean, you see headline after headline about Bitcoin. I think it's all just a sign that it's a bait and switch. And, the powers that be, they don't want you getting into physical metal. They don't want you getting into physical silver. They want you getting into digital assets that, they can control and they can manipulate and they can create new ones, because they know that hard money, gold and silver, is really the cure for inflation. And they don't want that. They want to maintain a monetary system where they can control everything and they can create digital currencies at the touch of a button, whether it be digital renminbi or digital dollars or Bitcoin or any of those things. I think those are all assets that can be manipulated a lot more than physical silver. And I'm not talking about paper silver. Of course, paper silver and futures contracts can be manipulated, but digital assets like cryptocurrencies, I think, are much more vulnerable to that kind of manipulation and that kind of hype than physical metals. So let me know what you guys think in the comments. What's your preferred inflation hedge? Is it Bitcoin and cryptos, or is it silver? I would love to know what you have to say. To finish up this video, I want to tell you guys about something called a crack up boom, because I think it's relevant to everything that we have going on in the financial markets today. And this is a term in economics coined by Austrian economist Ludwig von Mises. He was a pretty smart guy. So here from Investopedia, a crack up boom is an economic crisis that involves a recession in the real economy and a collapse of the monetary system due to continual credit expansion and resulting in unsustainable rapid price increases. In the face of excessive credit expansion, consumers' inflation expectations accelerate to the point that money becomes worthless and the economic system crashes. In the crack-up boom, the central bank attempts to sustain the boom indefinitely without regard to consequences, such as inflation and asset price bubbles. The problem comes when the government continuously pours more and more money, injecting it into the economy to give it a short-term boost, which eventually triggers a fundamental breakdown in the economy. In their efforts to prevent any downturn in the economy, monetary authorities continue to expand the supply of money and credit at an accelerating pace and avoid turning off the taps of money supply until it's too late. Now, if that whole thing doesn't ring a bell for you, I don't know where you've been living for the past 20 years. At least since the 2000 dot-com bubble, this is what's been going on. We've seen bubbles inflated by easy money. They pop and it's a crisis, and what does the Fed do? More easy money. And at this point, we are sitting right in the middle of the biggest bubble in history. And guess what? Sooner or later, we're going to find a pin. And I think that we all know what's going to happen when this bubble pops. Money creation that makes all the money created so far look like chump change. If you like this video, please give it a big thumbs up. Don't forget to subscribe and share this video with your friends. Here are some more videos about gold and silver for you to check out. Thank you so much for watching, everyone. I'll catch you next time. Smart Silver Stacker, out.